What's up, everyone? It's Scotty with MoneyVest. So we're going to break down some of the market forecasts for 2024, what experts and analysts are thinking in terms of recession expectations, interest rate expectations. We're going to cover it all. So it's going to be a little bit of a macro update for you. As always, if you enjoyed this video, all I'm asking in return is that you subscribe and join our Discord if you're interested. There's going to be a link down below with the 16% annual discount that does expire at the end of this month. So we got 4 more days left if you're interested in joining our MoneyVest community for the New Year's. Make it a New Year's resolution to focus on your investing and finances, and we're here to help. If you have any questions, please feel free to reach out, and I'm more than happy to help as much as I can. So this right here was the headline from yesterday. The U.S. avoided a recession in 2023. What's the outlook for 2024? Here's what the experts are predicting. So there's already too much wrong with this headline. As you guys already know, of course, nobody's a market expert at the end of the day. The more you learn, the better, because nobody at the end of the day is an expert in the markets. Markets are so variable. They're so unpredictable. And yet people try to make predictions every single day. They're like, okay, if I can just make one prediction right, I am going to make a lot of money. But that is indeed not how the markets work. It is a constant assessment of where we are and understanding the risk reward, understanding the current environment, instead of focusing or getting fixated on trying to predict the market, because it's just never going to happen. Like, you're never going to be able to predict the markets ever. Like, you could be right once, maybe twice, but you're not going to be able to do it consistently over time. And that's the bottom line. Nobody can predict the markets. But the U.S. economy avoided a recession forecast for 2023. Experts now say a soft landing or a mild recession is possible in 2024. These tips can help investors prepare for the unexpected. So what's in store for 2024? An economic decline may still be in the forecast, is what they are expecting. And the prediction is based on the same factors that prompted economists to call for a downturn in 2023. As inflation has run hot, the Federal Reserve has raised interest rates, and typically the dynamic is triggered a recession defined as 2 consecutive quarters of negative GDP. We actually did see that, but the National Bureau of Economic Research did not announce a recession, even though we did see 2 consecutive quarters of negative GDP. And now some forecasters are still optimistic that it can still be avoided in 2024. For example, Bank of America is predicting a soft landing rather than a recession despite downside risks. And more than 3/4, so here's the thing, 76% of economists believe that the chances of a recession in the next 12 months is 50% or less. Great prediction, right? You flip a coin, there's a 50% chance of recession, 50% not. So it doesn't really tell us anything. It literally does not tell us about what is going to happen. And that's the problem with prediction. I can tell you exactly what you need to do to basically be prepared for whatever is going to happen. That's the idea. That should be the goal, is to, regardless of whether there is a recession or not, you are so financially bulletproof that it does not matter. These predictions literally will not hold any weight or value over you if you simply create a structure. Your financial sort of planning should be done in a way that you are bulletproof. Doesn't matter. If there's a recession, great. If it's not, does not matter. That's, I think, a lot more important than trying to make a prediction and then preparing for what may or may not happen. You should always be prepared in the world of finance. So our base case is that we have a mild recession. This was Larry Adam, Chief Investment Officer at Raymond James. And that downturn, which may be the mildest in history, may begin in the second quarter, is what they're expecting. And of the NABE economists who also see a downturn in the forecast, 40% say it will start in the first quarter, while 34% suggested the second quarter as well. Again, bottom line, nobody really knows what's going to happen and when it's going to happen. S&P 500 futures shy of record highs. Interest rate optimism holds away. So now this is, in my opinion, a much better sort of predictor. If we were to look at predictors, this is a much better predictor of what is going to happen with respect to the market than anything else. And that is interest rates. Interest rates control, especially when it comes to equities, interest rates very much control the direction for where equities will go. And right now there is a lot of optimism, a lot of expectations that interest rates are going to be lowered in 2024. Okay, so what I would like you to do is really prepare yourself for a scenario where interest rates, if they come down, that's fantastic, that's great, markets rip higher and we are invested and we're long and everybody's making money, but also be ready for a repricing risk in the market. And how do you do that? The way you do that is that you have cash on the sidelines. You're not 100% all in invested at all times, so that if there is downside, if there is potential for a pullback, if indeed the recession predictions come true and markets do end up selling off, we're ready. We're ready to take advantage. We're ready to deploy cash. We're not going to be scared. Like, if the markets come down, we are literally ready to buy some good deals and invest in the markets and start deploying again so that we can take advantage of the recovery. Okay, so right now the market's very much optimistic, and that's been the part of the reason why we've rallied so much, because right now the market's pricing in 6 consecutive cuts is what the market's pricing in, starting in January. Well, we're going to pause in January, and then March is when the market's pricing in and expected to come down sub 4% in by November 7th. Literally my birthday next year. The market's pricing in a 3.3 and 3/4 and 4% interest rate terminal rate is what the market's expecting. So there is repricing risk, as we've already talked about, and that's the risk that you need to be prepared for. Regardless of whether that happens or not, that is something that I'm going to be prepared for. If it doesn't happen and markets have maybe potential downside, I will be ready. I will literally be ready with cash on the sidelines to deploy and look for some buying opportunities in that market scenario. Now, this right here is another really interesting article, which mentioned that bonds may beat S&P 500 in 2024 as the treasuries offer more bang for the buck. Now, we've already talked about TLT and TMF. TLT TMF was one of our very successful trades of 2023. We took advantage of the momentum to the downside from the 10-year treasuries. In 20 years, we kind of peaked at 5%, and since then we've been selling off. We're now sub 4%, sub 3.9% for the 10-year. And this was Howard Capital Management CEO Vance Howard. And he said in an interview with CNBC, he pointed to the recent gains made by the iShares 20-year treasury bond ETF, which is the TLT ETF. And he started buying a few weeks ago and has jumped 13% since the start of November. And he says, and I quote, "We've seen a really, really good rally in the bond market, and I think it's been very productive and positive. And I think people really to look at the bonds going into 2024. It may be better asset class than the S&P 500, even though we think S&P is going to do very, very well." So there's nothing wrong with having a good sort of a balanced approach in maybe looking at bonds as a trading opportunity, and of course S&P 500. That's mostly where I'm invested in equities. So TMF I'm no longer a part of. But really the question this now becomes is how low the rates are going to come down to, right? Are they going to settle somewhere? Are they going to keep getting cut? What's going to be the recession expectations? So this becomes more of a analysis of whether yields are going to drop further or not. And for that reason, I think a lot of the move has already happened because TLT has rallied 25-30%. TMF is up over 60 to 70% from its lows. And the bond market, which is the 10-year treasuries, have already dropped over 20%. Not saying that they can't drop any lower, but there needs to be a catalyst for them to drop lower. And that catalyst could be a recession. Okay, so we come back to square one. If there is a recession, the yields can drop further. They can be sub 2%. Interest rates can get cut very, very aggressively, and the bond market would literally rip. TMF and TLT would rally higher, and maybe there's a lot more upside left in that particular market. But that analysis needs to, once again, come back to the idea or question really, are we going to see a recession next year? If so, how severe? So that is going to be something that we need to assess when we get there. And again, a lot of the important leading indicators for that are going to be unemployment, jobless claims, things like inflation, right? So if inflation continues to stay elevated, then of course interest rates are going to stay elevated, which is going to increase the probability of a potential downside in the markets because of the rise in unemployment and jobless claims as well. So for this one, is there potential in 2024 for TLT and TMF again? Maybe this trade continues. We will assess and analyze. I will analyze this when the time comes. Right now, I'm no longer in TMF, but I do believe that there is possibility for the yields to drop a little bit further. There's definitely more room for TLT and TMF to rally higher, but how much higher, right? So that's going to be the question that we're going to analyze when the time comes. Right now, I don't want to make a prediction on what's going to happen, but we're going to analyze the risk and reward once we get there. So hope you all enjoy this video. And again, this is a little bit of a macro update. Bottom line is you want to be as financially bulletproof as you can be, regardless of the market circumstances and the environment. And whether we see a recession or not, whether we see downside or not, you want to be as stress-free as possible because that's really what's going to create this peaceful environment for your finances to flourish, okay? And don't kind of give into these predictions and don't put a lot of weight because nobody really knows. At the end of the day, nobody knows what's going to happen in the world of finance and investing and markets. So because everything is very unpredictable, everything's dependent on so many different variables. So it's a fact. Nobody can predict. So I hope you guys enjoyed this video, found it helpful. Make sure you drop a like, subscribe to the channel. Links to our Discord, Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.